In this video, I'm going to talk about commercial property vacancy. Perhaps you have been hearing a lot from people who did not invest into commercial property, or you have a genuine questions about, okay, I want to invest into commercial property, but what is the vacancy? Like what happens when the property remains vacant for so long? So this video is going to help you to understand the commercial property vacancy and more importantly, how you can tackle those so that your property will not become vacant for long period of time. So if you want to know, then stick around. So commercial property vacancy, right? You perhaps went with your friends and they have been talking about, oh, don't invest into commercial property because there is going to be the vacant. As soon as you buy that property, that becomes vacant, right? So let me put together what happens to a commercial property investing. First of all, this is the first time you will be investing into commercial property. Then one thing that you need to understand is that you should not buy your first commercial property as a vacant property. Okay, so if you do not buy a vacant property, then you will buy a tenanted property, right? Means the property remain tenanted. Why? Because as a first time investor, what you need to understand is steady cash flow. So from day one, if the property remains vacant, then of course you are not getting cash flow, right? Perhaps you bought that property recently, and more importantly that you need to pay the stamp duty, other expenses and all sort of things, and then on top of that, on the next month, if you have to pay from your pocket, this is going to be a significant stress. So first investment, you do not buy a vacant property, you buy a tenanted property. If you buy a tenanted property from day one, you are getting cash flow, which basically means that your property is tenanted. Now, that doesn't mean that it is going to be tenanted forever, right? Perhaps you have a lease of 2 years, 3 years, 4 years, whatever be in that lease is left, is that many time and that many years the property will be tenanted. Now you will of course do due diligence. You need to understand the tenant, their business and all sort of things, and by now you have concluded, yes, I want to go ahead, I want to buy that property. So the first tick box is that you must buy a tenanted property as your first investment. Doesn't mean that you will not buy a vacant property in the future, but it's just the first investment property. You should always focus on buying a tenanted property. Okay, tick box done, right? So if it is a tenanted property, then your next question will be, okay, how long it is being tenanted? Based on the lease, let's say 2 years, 3 years. Now I am also assuming that when you buy that property, then you do not need financial independence on day one, right? Like you have a job or kind of a business income, and that is giving you your day-to-day expenses, and you now want to build a portfolio which is going to give you positive cash flow in the future. But because commercial property is positive cash flow from day one, and this is how you need to understand that how you can buy a commercial property from like a positive cash flow from day one, then what it basically means that as soon as you buy, on the first month you will have a positive cash flow. You'll have some extra money left after paying all these mortgage payment and everything. That money you don't need it because it was not there before you buy that property. So once you started buying commercial property, the first property, then it is giving you positive cash flow. What you need to do as a strategic point of view to keep those money as kind of a buffer. That's a very important part, because do not just spend that extra money just thinking about that, oh, it is going to be rented forever. So the tactical way of doing this is to build up what I call a kind of a buffer or a nest. What happens is that by putting this buffer every single month, you are putting some money aside. So in the event like the property becomes vacant, which technically is not vacant, it's just like in between tenancies, is where you need to use up that money for your mortgage payment and all. And think about this for a moment. You bought that property, it is, let's say, tenanted for next 3 years, and after that assume like let's say you will have a 3 months vacancy. That 3 months period there is no income, there is no rent coming, which means your mortgage payment will be from this reserve, and you can build these reserves up to 3 months, 6 months, sometimes even 1 year worth of nest egg or 1 year worth of like a deposit that you can keep it. Now this money you can keep it in your offset account if you have other investment, let's say. So you are actually saving the interest as well. So the money is not being parked as such, like it's not lazy money, it's still giving you 5-6% return, depends on your interest rate. But what it actually does is it is there, and it gives you a lot of flexibility that hey, I can now take a better negotiation with the tenant, that okay, we can't just all the time listen to in a situations that it is going to be, if it is vacant then I'm going to struggle. No. So this is the part that you need to understand, that you need to keep a buffer. So now next thing that you need to do is, in order to tackle these vacancies, to be aligned with the market. What do you mean by be aligned to the market? If the market is saying that there is a lot of properties that is coming to vacant and there is a like overall genuine market downtown, then you might have to give some extra care to your current tenant so that they stay there. So you must have this through your property manager discussion with the tenant, that what's happening, how you're making money, is there anything that we could help you to further negotiate with the lease, or further, so that your business can go and it can make more money. Remember, if the tenant is making money, they were going to pay you rent. If the tenant is not making money, they are going to struggle to pay you rent. So knowing that your tenant is making money is basically keeping up to the market. A lot of investors I know, they buy commercial property and they just forget. They don't even care what they give it to a property manager, and that property manager deal with this tenant, and they don't even ask any questions to this property manager. They have no clue about the market, and all of a sudden once the property becomes vacant, they like suddenly wakes up, oh my god, what I'm going to do. You are not going to be like that. You are going to keep a tab on the market. You need to see that what's happening in that area where you purchase the property, and be assured that yes, it is going good, the overall market is good, and my tenant is making money, so I will do not have to worry much because they are going to renew the lease. Okay, that's the another way of handle the vacancy, right? Because if you make sure that this thing doesn't happen, then there is no chance of having a vacancy. But on the other side, if you are ignorant, if you don't look into anything, then the property will come to vacant at one point of time. Okay, now let's say in spite of all doing these things, your tenant wants to move out. So this is the time the vacancy can come. Now, if you bought a property where in general market where others are also looking for a place, then it is going to be tenanted, right? Now, there are certain tricks that you can use it. Number one, you will be able to know whether your tenant is going to move out or not at least 3 to 6 months before, and this is exactly the market also talking to the tenant, and more importantly, it must be written in the lease that they need to notify you at least 3 months before. And this is exactly happened right now in one of our the property that we manage, that the property coming to into vacancy. So we are actively looking for another tenancy before that. Now, if you have this 3 months time where it is still tenanted, they're still paying, but then you are you're advertising, then as soon as they move out, finding a new one is much easier. It is going to be quicker and your vacancy will be extremely low. On the other side, if you are not looking, if you once they move out, then you advertise, then you think, or perhaps after moving out, 1 or 2 months you don't do anything, you want to do by yourself, you don't want to hire a leasing manager, and then it is going to be a longer vacancy. So it's not, the vacancy is not only sometimes in the market, is sometimes with the stubbornness of the landlord or the investor who doesn't want to do this proactively. You are not going to be like that. You will be different and you want to do these things properly, right? That's the part you want to do. You need to know beforehand, and you are going to advertise and you're going to attract more. There is something called tenant incentives, which is basically attracting a new tenant, and that time you provide some generous incentives. Because remember, once you get the tenant, then if you can sign a 5 years lease, 7 years lease, 10 years lease, means they are going to stay there for that long time. So yes, there could be a vacancy, but if you provide some generous tenant incentive, which will attract better quality tenant, and your property will remain tenanted for long period of time. And last but not the least, that in spite of all doing these things, even though the property remains vacant for 3 months, 4 months, then ask yourself, talk to the people, your asset manager who is managing the property, who is actually advertising this, talking to them like what's happening, where is the market rent, are we asking too much, are we providing the generic incentive? And if you are doing all these things, then I can tell you it is impossible to remain that property vacant for long. Remember, every property can be tenanted. The question is on what rent, is on the market rent. And if you drop even 10% below the market rent, you are going to get a lot of potential tenants. So in a nutshell, think about this. if you are losing money, if your property remains vacant for a whole 1 month, then you are losing 100% of the rent. But if you reduce the rent to 80%, 85%, don't you be happy? Yes, your property value has gone up a little bit down, but hey, you are taking that hit, but you are using that as a weapon, because 80% rent is way better than 0% rent. And this is the way you tackle vacancy. Most people don't do like that. Most people, most investors, they don't look into this. They just give it to someone. They don't understand, they don't put these thoughts, and as a result their property remains vacant. But if you do these things, I assure you, your property will not come to the market for long period of time, and even though it is there, you will find that tenancy quickly. I hope you find this videos helpful and gives you some ideas. Now please do me a favor, I know you're watching this video, please subscribe this channel, because what you basically helping me to do is that if you subscribe, the YouTube algorithms is going to push this video more and more people, and that way more people will be getting benefit and understanding this about commercial property. I am obsessed about teaching people, telling people about what commercial properties can do, and it actually helps you to motivate you to one day, if you are thinking buying commercial property straight away, probably going to help you in a way that you can save thousands of dollars. Thank you so much, and I'll see you next time. Bye bye.